Following the invasion of Ukraine in March 2022, Western powers imposed severe sanctions on the Russian economy. Over $300 billion of Russian assets were frozen. The ruble collapsed, inflation rose, and the economy headed towards recession. It seemed the perfect storm to create deep economic problems for the Russian economy. Yet, bolstered by support from China, the Russian economy has done much better than many expected. Real GDP has risen, inflation has fallen, and the ruble has recovered lost ground. How did Russia shrug off these economic sanctions and its lucrative Western market? But also, how sustainable is this new economy for Russia? Well, firstly, as the Russian ruble fell dramatically, the Russian central bank responded by putting up interest rates and imposing capital controls. Higher interest rates encouraged more savings in Russia, and also the capital controls prevented people taking their ruble out of the economy. These measures worked in stabilizing the ruble. Now, you could argue that the strength of the ruble was overvalued on the official exchange rate because capital controls hid the real value. Certainly on the underground market, the ruble was trading at a lower value. Also, while some statistics like economic growth look relatively good, it's always worth bearing in mind that Russian statistics are unreliable because of government interference. We can't know exactly what is actually going on. But nevertheless, the recovery of the ruble helped to make imports cheaper, and it brought inflation down, if not completely under control. The problem is that if the economy is already weak, then raising interest rates to 20% would normally weaken investment and demand even further, creating a deep recession. This is why many were so pessimistic about the Russian economy. Yet, the Russian economy has been bolstered by a surge in government spending on military spending and related finance. At least 30% of Russian government spending now goes on military spending. It's over 6% of Russian GDP. It's a classic example of Keynesian demand increase. It's reminiscent of the Axis powers in the 1930s or the US economy in the 40s or 50s. So this strong growth has come through really increasing government spending on the military. But is this level of military spending sustainable in the long term? But it also raises the very important point that higher GDP does not necessarily mean higher living standards. If GDP is spent on weapons, it does not necessarily translate into well-being and consumption, to say nothing of the human cost of war. Now, initially, the Russian economy was boosted by the very high price of oil and gas, and this led to a surge in oil and gas revenues. Fossil fuels are incredibly important to the Russian economy. They account for around 16% of GDP and up to 45% of the Russian government revenues. However, since this 2022 peak, oil and gas prices have fallen quite sharply to basically pre-war levels. Not only that, but Russia's biggest former purchaser, Europe, has largely been cut off from Russian gas, and sanctions have limited demand for oil. In fact, Europe has managed to transition from Russian gas to other sources quite seamlessly. Now, in theory, sanctions and lower oil prices should be devastating for the Russian economy. But to a large extent, Russia has found alternative buyers for its fossil fuels, in particular China and India. China's support of Russia has been critical in transforming the Russian economy from one facing west to one facing east. Russian exports and imports to China have more than doubled in a few years, and this is forecast to keep growing in the coming years. Basically, China is buying the gas and oil that Europe is rejecting. China initially bought Russian oil at a large discount, but in recent months the premium has declined. The Economist reports just around 5%. Now, Russia is definitely more dependent on China than China is on Russia, and if China cuts off ties with Russia, it would be devastating for the economy. But at the moment, China's rivalry with the United States and the ongoing trade war make Russia a useful political ally. Also, China and other emerging economies would have noticed the impact of Western sanctions on freezing dollar reserves, and this does create an additional incentive to create an alternative economic system, reduce reliance on dollar reserves. And it's not just China, but also a fast-growing Indian economy, which is keen to buy Russian oil at a slight discount. Also, For all the talk of Western sanctions, in the real world it's proved actually difficult to enforce. For example, the UK has seen a suspiciously large 2,000% rise in exports of luxury cars to Azerbaijan. Now, of course, this is just a brazen method of getting around sanctions to Russia. Once sold to Azerbaijan, they find themselves in Russia. Now, on its own, this is not particularly significant for the Russian economy. But what is much more problematic is that oil embargoes have proved relatively easy to get around. European countries have been importing petroleum products which were refined outside Russia but initially came from Russian oil export. After sanctions were introduced, many Western firms left Russia. But this did very little damage to the Russian economy because Russian entrepreneurs simply bought up the assets at a knockdown prices. They reopened stores and restaurants under new names such as Star Coffee. When Hollywood stopped selling films to Russia, Russian cinemas responded by simply showing pirated copies, ignoring any sense of copyright. Rather than stopping films, it just reduced costs for cinemas. The biggest impact of Western sanctions was limiting Russian firms' access to vital components, and this has definitely caused delays in the manufacturing process, especially cars. But again, to a large extent, China's come to the rescue of the Russian economy, with becoming a new supplier of these critical components. Now, a big cost of the war has been a loss of male workers. An estimated 1 million Russians fled the country trying to avoid conscription, and there's been even more drafted into the army with very high casualty rates. Firms report difficulty filling vacancies and even have had to halt production. Unemployment is less than 3%, but vacancy rates are over 6%. And this has created nominal wage growth of up to 18%, creating more inflationary pressure in the economy. The Russian central bank admits that it's a serious problem for the Russian economy. What about the long-term prospects for the Russian economy? As a share of world GDP measured by purchasing power parity, the Russian economy is in decline, and it's forecast to get worse as the world shifts away from fossil fuels, the Russian labour force declines, and its reliance on military spending and fossil fuels limit investment in new areas of the economy. Russia has become increasingly dependent on China, but it's a higher cost to transport gas and oil to China than it is to Europe. At least in the short term, war spending is providing a boost to the economy, but it is something of a sticking plaster to cover over some of the longer term cracks. In the long term, the much more significant weakness facing the Russian economy: shortage of workers, inflationary pressure, lack of investment in non-defence industries, and the loss of customers in the West. Now, one thing Russia shares with Europe is very sharp fall in birth rate, and this will have a very big economic impact in the coming decades. In fact, Russia has one of the lowest birth rates in the world, exacerbated by a higher death rate. This video looks into the impact of falling birth rates for European economies.